is Don Kaufman, and you are watching the TheoTrade evening video, March 22nd, 2023. Well, the topic of conversation, of course, for this evening is the How Did This Happen Fed. Did you miss it? Jerome Powell hits the main stage, of course, during his press conference and was actually referencing some of the banking crisis, and they completely missed it and literally says, well, we want to know, how did this happen? The marketplace, it did not like that kind of rhetoric. In fact, I think that drove fear into the hearts of all traders and investors alike. That's why I call it the How Did This Happen Fed. Look, I'm not here to actually give you a complete recap of everything Fed related. The Fed did exactly what we expected them to. What did they do? Well, they hiked by a quarter point. Speaking of which, if you look at some of the price action in the marketplace, upon the 25 basis point hike, which was done right here. Again, 11 a.m. Pacific time is when the actual the Fed, hikes. Okay, then you have to wait 30 minutes for the press conference. But I want you to see what transpired. That hike was largely priced in. There was over an 80% probability. Of course, the Fed hike, what did we do? We just channeled back and forth. Then Jerome Powell hits the main stage again at 11:30 Pacific time and has some commentary. That commentary, was well taken by the marketplace. And the reason I want to zoom into this, and again, forget about what you think about what the Fed said for a second. Look how positive the price action was. We were trading roughly 40.30 in the S&Ps. We shot all the way to 40.73. So whatever Jerome Powell said at that point, they loved it. Right up until the point he actually drove fear into the hearts of all traders and said, how did this happen? The markets, they didn't react so well to that. And it was some sell side activity thereafter. But I'm going to show you something that I think you're going to find very, very interesting. And that happens to be, if we cruise over to the SPX, the mother of all products inside of the SPX, what you're looking at right there, that line, it's the upper edge of the expected move. Now, for those of you that do not speak geek, and again, I want to be very, very clear. When I say do not speak geek, if you do not speak geek, it's fine, but this is the expected move, and we talk about it incessantly here at TheoTrade. The expected move is plus or minus roughly $120 for the course of this week. What I mean by the $120, that is how the option marketplace depicts risk. That's not like a wild number we're pulling out of thin air. The option marketplace, for the entire week looked and said like, hey, the market was set at 120. That basically means we're supposed to rally up 120 or down 120. Now we see this every single week. We literally came to the upper edge of the expected move. To be really specific, the upper edge of the expected move, is 40.37 in the SPX. We actually hit 40.39 and completely reversed off of it. It's a tag and a reversal. However, that reversal, it did absolutely coincide with some of the commentary out of Jerome Powell. So call it crazy, call it happenstance, but nevertheless, the marketplace reversed off it, and we reversed by a full 100 S&P handles. Now, before I really start to break down trade and give you levels, one thing I really want to actually dig into, the financials, they didn't like this, The comment that came out of them, as I said, instilled fear. It instilled fear in me. Like, I listened to the comment and like, whoa, we have to evaluate. How did this happen? If you don't know how that happened, what do you think's coming? Oh, no clarity is what you're telling us. Anyway, at that point, the marketplace was already in free fall, and you can see that the XLF came off hard and fast, down another 2.3%. The point I want to bring up inside of the financials, you do realize how close they are to breaking through the lows. So everybody, recognizes that we're just, 10 trading sessions into what was a banking crisis. Nevertheless, since that had actually kicked off, the markets are actually a little bit higher. Well, until right now. Now they're coming back off. So now we are a bit lower, And that's from, if you will, when we actually are saying, all right, on March 9th, they talked about a banking crisis, yada, yada, yada. We start heading a little lower. We've got a bid under us, What you need to understand at this point, financials are nearing some of their lows. right? The financials had a strong bid under them, actually tagging the upper edge of their expected move, reversed and are almost unchanged in the week. If you take a look at the energy sector crested outside of its expected move, big reversal in here. But the most critical sector at this point in time, okay, sure, energy, critical. You have to look at financials, critical. But what was big today is that a sell-off started to come from what has actually held the marketplace together. Okay, now the sell-off inside of the Nasdaq, specifically the monsters of tech, now you got to be a little bit afraid, because if big tech comes off, it's going to be ugly out there. Let me show you the Nasdaq, the QQQ, in terms of auto expected moves. Okay, now there's no question that the financials are obviously at the forefront of the sell side activity. That's something that we've been expecting since the beginning of the year. I've talked about that ad nauseum. Okay, along with the financials, you have the energy sector being hit and hit hard. However, at the exact same time I'm saying that, I'm telling you, you need to pay attention now to the Nasdaq, because the Nasdaq sustained the entire S&P 500. Okay, the sustaining bid under the S&P 500, like if you looked at the spiders and said, man, how are the spiders up after all this talk of a banking crisis? How are they up? Well, answer is, I don't know, take a look at Microsoft, huge breakout to the upside. Take a look at Meta, huge breakout to the upside. NVIDIA, okay, insane. By the way, key reversal inside of NVIDIA today, in just insane moves. What you basically have is, you know, $500 billion company market caps and more, you know, the Microsofts, okay, even Apple on a strong bid. They have, again, not only held the market up and propped it up, but you've got two major sectors, your financials and your energy, with their legs kicked out from under them. If we start to lose, okay, in just the next day or two, you start to lose the monsters of tech, and the monsters of tech is the conglomerate. It's Microsoft, it's Apple, it's Amazon, it's Google, it's Meta. You start to lose those, it's over. You know, and when I say it's over, we are actually going to see some strong sell side activity in the marketplace, which brings me back to the S&Ps. Okay, let's get down to some levels. Okay, there were two levels that were in play earlier today. For the Fed announcement, to the upside, there was 41.06. Yes, there was the upper edge of the expected move, but I kind of thought maybe the marketplace would just blow through that and hit the 41.06. It's very evident the 41.06, it is out. It's out of the contest. If you look to the downside, though, right now, it is a critical level. Oh, yeah. 39.31. We've been talking about that again till we're blue in the face. You could hit 39.31. You might hit it overnight. If you come down to 39.31, now it becomes an absolute abyss if we trade under it. I have got to stress this and stress this again. You come back down to 39.31. I don't believe it's going to hold. At that point, you have a straight shot right into the 3,800. Okay, and people are like, where do you see that? A lot of it has to do, look at the defensive nature of the bonds all of a sudden. The bonds, which had backed off for a couple of days, this is really horrendous defensive posture from the bonds. Okay, gold soaring to the upside. I mean, it doesn't look like much, but gold's ready to break back out to the upside. Bonds are ready to break back out to the upside. Okay, all you have to do is see the S&Ps come back down to 39.31. They're going to smash through, and you're, well below. You're at 3,800 at that point. In fact, that's when I'm going to go back to the SPX. Why am I going back to the SPX? To point out the lower edge of the expected move in the SPX. Can't make this up. It's basically 3,800 on the button. I'm telling you right now, do not even bother worrying about individual stocks at this point. What matters for the remainder of this week? Technology. Okay, look, you've already seen blood in the streets in terms of what? The financials and energy, right? So if they continue to see any sell side activity in financials and energy, it's going to keep pressure on the markets. But you want big pressure on the markets? You want 3,800? Yeah, you better watch big tech. Big tech, again, it has held us together. Okay, what's scary is when you look here. This, is exactly what I've been warning about throughout the course of the week. If the correlation, starts to hit its stride, it's going to be over in this marketplace. There could be a precipitous drop in markets. We are primed for just that. I have to tell you, didn't know. I had no clue how this Fed announcement would play out. And I was the first to actually give you both sides of the marketplace, both kind of an upside and a downside look. It's pretty evident now how it's played out. And again, let's not even worry about the bond market that's ready to break out, the gold market which is ready to break out. But you better look at the S&P 100 and realize that is full-blown correlation. That's what we call a quintessential all-down day. Over 100-point reversal inside of the S&Ps. People, it is on. Volatility, okay? If you're looking at it and going, well, it barely moved up. Yeah, give it some time, people. Give it some time. The sell side activity didn't even happen to the last 45 minutes of the day. Okay, everything in terms of volatility is rocking to the upside. Look for the volatility futures also to go back into what we term backwardation. They are still in a very mild contango. Look for the volatility futures to go back into backwardation as the S&Ps are very likely to crest back to 39.31. If they don't hold the level, get ready for some wild sell side activity. That is it for this evening's video, the How Did This Happen Fed. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.